best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to the Financial Survival Network. Things are happening more or less on cue, like we've been telling you. If you've been looking at Charles Nenner Research, well, he's pretty much been on target here. We've got David Gurwitz from Charles Nenner Research on with us now. If you've been getting the free report or subscribe to it, well, let's talk about what's been said, where the cycles are heading. And David, welcome back.
Thank you, Kerry. As always, it's a great pleasure to chat with you. Yeah.
Hey, and David, it's interesting. You're telling me, music is your love. It's interesting that you started later in life. So many things, you have a talent for, but life gets in the way and you don't get started till later. That happened with me with radio. Right. Only started a few years back, but really it's my love in life. And you got started in music at 19. And you always knew that you loved music though, right?
Well, I'll tell you the quick story. The markets we'll talk about in a few minutes. We can knock that down. These are Charles, too. He's a guy that in medical school discovered this pattern, as I've said. So he'll be 64 in a few months. And he started 30 years ago. So the first 30 years, he wasn't thinking about markets. And when I grew up in the Bronx, was a pretty avid sports fan, never touched an instrument. And my brother, who was a very good guitar player, we used to play a game, Name That Tune, on the broken radio. We were pretty poor and lived in the Bronx right by the Grand Concourse and the Cross Bronx Expressway, so pretty noisy. And we used to listen to the older radio, and after 3 notes, I had to name that song. So I was ear trained. I didn't know it. Then I grew up, and there was the Pistol Pete era, where I grew up with all the good ball players, and he used to practice dribbling, so I would dribble, and I must have dribbled a basketball. I was a good basketball player. I played semi-pro in Spain. I must have dribbled a basketball a million times. And when I was also a math person, as you know. I was a math major. I went to Bronx High School of Science, and I went to Brandeis University, and I was pretty good in math. And I was taking a math course, and the professor said, he showed music is math. The name of the course at the time was Finite Dimensional Vector Spaces, which everyone should Google to see what that means, which I won't talk about now because I actually still can explain what that means. So anyway, we hit a wall at one point, even the geeks like me. And he said, let me show you music is math. He drew a Fibonacci sequence. Every number is the sum of the previous 2, which is the basis of the Elliott wave. And then he drew a keyboard, and he shows 13 keys from C to C, and which is an Elliott wave number. 8 white keys, 5 black keys, group of 3, group of 2. It was Fibonacci. I ran down to the music building. And I'm in shape. I've been playing ball. I'll be 60, but I've been playing ball since I'm 7, right? I run down to the music building, and there's 30 pianos there in different rooms. And I put my hand on the piano, and I had been a disc jockey. I had a good ear, but I never thought about playing. I put my hands on the keyboard, and I had it in my hands right away. I started playing, and playing piano and dribbling is the same motion.
Really?
So I had literally practiced moving my hand up and down like a drummer, right, 1,000,000 times. And so I had this combination of music, math, basketball all come together at that point 41 years ago, which is kind of amazing. And now I have a big website, davidgurwitz.com. I play concerts all over the world, usually for charities. And that's my quick story in 3 minutes.
That's remarkable. And it's interesting that it's all connected. And it's not something you necessarily think about, but yeah, everything is math. And even, when you talk about music, I remember a famous conductor of an orchestra. He's conducting a symphony, and an airplane flies over the symphony. They're doing an outdoor concert, and he said, he says to the orchestra, that's a C major. He's really upset because it's out of key with what he's conducting.
Yeah,
and it's like
my father was a truck mechanic, and he didn't hear, I always tell people, he didn't hear my mother so well, but when a car would drive by, he would say to me, the seventh cylinder is off.
Yeah, that's just funny. That's just funny. So
I didn't hear what you said, right?
Yeah, but looking at these markets, so it looks like the stock market's hit a pretty major roadblock here, and it looks like it's hit its high, huh?
Well, let's talk about the research we sent. As you know, we predicted this.
Long time ago.
Yeah, we said we get a 10% correction is what we got. Again, for your listeners, we send a paid newsletter to thousands and thousands of clients, but the first month is free. So they should write to charlesnenner.com and say they heard Kerry and David, joking about all these things, and they'll get a free month. And the newsletter covers stocks, bonds, commodities, currencies, and economic indicators. Let me hit them all, Kerry. I'll do the rush down the lane. I'll do it all in 3 minutes because then we can have fun the rest of the time.
Sure thing.
But stocks, we cover S&P, NASDAQ, Dow, the DAX, the German index, which we just told everyone that would be the worst, and we were right, and the Nikkei. And then we cover the Toronto exchange. We have a lot of clients in Toronto. And we cover the VIX. And I think people who, we have thousands of clients, so I talk to them occasionally. Nobody, at least I shouldn't say nobody, people haven't really focused on trading the VIX either directly or as a hedge against their longs. But the VIX is something we've been dead on for several years. We wrote on Monday, we gave a buy signal at 1250. Last Wednesday, made it up to 30 and then closed 8 points lower. And we think it's overbought. However, as long as there's no close below 1850, the buy signal in the VIX continues. Mm-hmm. So I'm stressing thinking stocks, they should think VIX. And also the Canadian, we called from 12,000 to 14,000 over a couple of years, got out, went back to 1350, called it up to 14 in the middles. And then we said it's going down to 13.9, which it did. Then it bounced. Too early to go back in. So that's the big picture in stocks. We called this IBM thing 2 weeks ago. Do you remember on Sunday?
Oh, yeah, sure. Yeah.
We said it's going to be a problem. Again, the way cycles work, we have no idea why something happened. We just know when, and we think to what level. Right. And that's what will become evident as you watch the research, because it takes a while to fully follow it, we think. But basically, stock picture, there's going to be a rally. There'll be a year-end rally into next year. Next year looks like a big V in the stock market. We don't know levels yet, but Charles on CNBC a couple of weeks ago said for the next 5 or 6 years, we don't see the stock market being more than 5% higher than it is now, which means it'll be mostly a lot lower than it is now.
Right.
Okay, and stay tuned how that works, because it's not, so easy, and it's not going to be so pleasant. And I'll add 2 things at the moment while we're talking about stocks: war cycles and infectious disease cycles. Mm-hmm. And we all know about an infectious disease, happens to be called Ebola, but it's an infectious disease. Those 2 follow cycles. We're studying them now. Charles mentioned this 5 years ago, that this could be a major issue coming up, and no one was thinking about it, just like he mentioned war cycles 4 years ago on Neil Cavuto's show, and nobody thought about it, and look what's happened in the world. So these things do have an effect. It just takes time sometimes, and people, the media, not everybody's you, Kerry, to let people talk, and look to think big. There's all this short-term pressure, answer questions fast, and, there's not such a pretty picture coming. And those are some of the reasons we think why. Is that, wars are going to increase, and infectious disease. And if infectious disease comes, people don't think about it, but it's not like you just go down to the drugstore, because sick people are going to be going down there, so you can't even go there. And that's kind of a whole scenario Charles talked about. He's a doctor, so he thinks about these things. Anyway, that's the stock picture. Mm-hmm. Big picture, next 5 years, not pretty, and then the following 10, very good. How's that for 15 years? Remember the TV commercial with Bird and Magic? Let's play horse off the moon. Mm-hmm. That's what we're saying. Off the moon. Next 6, 7, 8 years ain't going to be so pretty. And then afterwards, if you survive, it's going to be amazing.
That's the if.
That's the if, right? That's the if. And then bonds are going to be sideways for quite a while, range bound. So that makes it difficult to make money, right?
Sure.
It's done those 2 things, which are, I would say, 85% of money is either in stocks or bonds.
Sure.
So not that there won't be some great stocks. There will be, obviously, but most won't. And being that he did call the Dow from 10.8 to 14.5 and it went to 14.2, and then he went long the beginning of 2009 after taking people out. Long term, he has a pretty good read. The system works, but it's very hard for people to accept it, as you and I have discussed many times.
For sure.
So that's the stock and bond picture in a nutshell. Let's talk about something called gold, which you've heard of.
Oh, yeah. We have a passing interest in that.
Let me stress that there's a book written by a guy named Kerry Lutz on gold that you should get if they haven't gotten it. Yeah. I highly recommend it. It's, in my opinion, the best book I ever read on gold. Well, I've actually read it twice because I didn't know 90% of what you wrote in it, because that stuff, I don't know. I just follow cycles. You actually have, your knowledge of fundamentals in history is pretty amazing. And so this is me saying it unprompted. The Kerry
well, you're too kind. But hey, when we return up next, we'll talk about gold and silver, crude, nat gas, and a whole bunch more on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you just joined us, we've got David Gurwitz of Charles Nenner Research with us now. We're reviewing markets, and at this point, we're talking about gold and silver. And what's the take on gold and silver here?
Okay,
David?
Let's talk gold, silver. Let's talk copper. Mm-hmm. Okay, and then we'll talk crude and nat gas at this point. So gold, big picture, it had 11-year run-up from 300
to 12, yeah.
12. Okay, good. I'm glad, because it went to 1900. We took everyone out at 1900. That's one of the best calls he ever made. He didn't go short. He just did get out. You wish he went short, but that was good enough to get out. It's had 3-year down. Mm-hmm. I would imagine probably 10% of all the depression medicine in the world is from people that are long gold. And July was the beginning of a long-term bottom. Okay? Mm-hmm. So we're long gold now. We're taking every short-term bottom as a possibility that the short-term and the long-term are lining up, and it's the move. When we get up to December, 1420 is a good number. Mm-hmm. We're going to reevaluate, because there may be another hit back then to take it back down.
Right.
And if we'll see, because we have a level and timing system, or timing called cycles, which just gives you direction, and timing and the level is a whole nother thing. But that's the gold picture. So it closed above 1240. That was our number for opportunity. The other day, take the trade. Traders who put in a tight stop. Weeklies are up, but above 1260s needed to see gold higher. Silver never closed above 1750, so it's not on a buy signal yet. But that's kind of the big picture for gold and silver as we see it, that there is long-term up and back past their prior highs, which is good for the people who are long-term and depressed the last 3 years. But you've got this move up until December, and then we're going to take another look. But the long-term has bottomed.
Hey, just a brief question here about platinum, palladium. Palladium was on fire. Then it really got slammed the past couple of weeks, back up in the 775 range. And you basically had called a couple of months ago that it had hit its peak and pretty much wasn't going to go anywhere for about a year.
Right. Let me say the last time we looked at platinum was June. Mm-hmm. Where did it top?
Platinum topped around 1,500 a while back.
Yeah, we wrote that. Funny. I haven't thought about platinum. Platinum continues in a buy signal. We wrote in June. By the way, the listeners, they get a update Monday, Wednesday, Friday, and then on Sunday we do charts. And so the charts of June 22nd, platinum weekly cycles, we expect to see, it's on a buy signal. Listen to this. We expect to see 1530 until the next short-term cycle high. Mm-hmm. And it got there, right? Close.
Yeah. Mm-hmm. Pretty close.
That was it. Yeah. So I don't know. I can't remember everything, but it was a pretty good call.
Mm-hmm.
And, so POS, we expected more upside. We wanted to protect the long position because we made a 10% gain on that with a sell stop 13. I don't have platinum, Kerry.
Palladium. Palladium.
I mean, palladium. I don't have platinum.
Mm-hmm.
And God willing, we will look at that stuff one of these days.
Okay. So
see palladium.
Yeah. And then on to crude, which has hit like 2-year lows, and it's on a sell signal. And you pretty much called that one on the nose.
Yeah, let me go back to August for crude, just to give you an idea what we were thinking. August, right? It's now October. So 2 months ago, crude's in the trading range. The cycles are down. Okay.
Mm-hmm.
So we called it 2 months ago. I was interviewed on Newsmax, and this was when ISIS started.
Mm-hmm.
And they said, well, shouldn't crude be going up because of the news? And I said, don't follow the news. I hate to break it to you. I haven't been on Newsmax since, so maybe I offended them. They're nice people. But this is, let me go back on crude. Charles called it I remember I started with Charles 12 years ago. Crude was 17, 18, 19 bucks. And it went up to 147. And on CNBC, when crude was 147, he said the D word, deflation. And they were laughing at him. I was still about 30 feet away from where they were interviewing him.
Yeah.
This was the old CNBC with, different anchors that we actually were friendly with. And it went down 100 points over the next 6 months. It went down to high 40s. So he was right. And then it went back into the 100 range. So long-term crude, he was right, down to in the high 40s and back in the 100 range for several years. We think there's a bottom coming in November. We wrote that on Monday. And then that will be a pretty decent trade into March or April. We sent out a chart. Everyone writes in. We can send them that chart showing a low by November, but a close above 85 cancels the short-term sell signal. But we still think there's risk for more downside. So the way to use our service is to, when we're saying there's a warning, it's probably going to happen. Everyone's got different risk abilities. They have to decide how to play it. Nat gas has been a difficult trade. A sell signal came near the intraday low of 370. Our target, it came to 374. Target was 370. Cycles are down. Above 4 cancels it. We think it's going to 2.
Wow.
In a year, despite cold winter coming.
Mm-hmm.
Copper, we haven't covered much. So I just say it's on a sell signal of 311. Cycles are down. Okay. So I've covered stocks, bonds, commodities, other than food, which we think will be bottoming soon. So that's something to think about. And currencies, the euros are in the 127 range. And I was just on the phone with a big Swiss insurance company. We have those type of clients and we have individuals. We got everything from all over the world. And the euro, he was saying, he is Dutch, so he thinks about this. The euro's got to get to 120, otherwise Europe's going to be a mess. I mean, everyone's trying to export deflation. So the euro is still too high for them. And we think in March, the strong dollar will change. Next year, the dollar will go the other way. There are those that disagree with us. That's what makes horse racing. But we think the dollar is going to long-term down, but it's been very strong, obviously. And so when you're smarter than me about the gold-dollar connection. I don't understand it. I just know gold goes up in deflation or inflation. So it's actually going up more in deflation as in inflation, according to Charles, in the past. And the 1900s was mostly deflation. People forget about that. So that's the gold picture. What percent to allocate money? And I have no idea. And here, give me $1 million. What do I do? How do you chop it up? One way is just put it in $100,000 chunks. 100 here, 100 there. That's one way to do it. Certainly don't put it in the bank.
That could be hazardous to your wealth for sure.
You're not getting anything, and we think our system. Look, you've been watching our system 3 years.
My whole life, really.
No, I'm saying what percent do you find us to be right? And
hey, look, if you could be right 55% of the time, in Vegas, you could make a fortune.
Yeah.
And, on the street, if you're right 60% of the time, and you allocate properly, you're going to do just fine. And I've found it pretty much well above 80%.
Right.
Well over 80.
Right. Now, we don't do that many trades. We don't think people, look, most of our clients are not traders, and trading's hard.
Yeah, you have to be a pro to trade.
I'm not.
Me neither.
So people need to know their mindsets. Charles said the feeling of a good trade in the brain is the same spot as where the feeling if you do cocaine. It's the same spot.
Or gamble.
Or gamble. So you have to be careful in this process. And I just think also there's too much information to process. The human brain, at least mine, can only handle so much. And I think we're overwhelmed with information. So it's better not to be so, buffeted, no pun intended, because obviously he knows what he's doing, by the constant trading. Unless you feel comfortable, people like it. They should do it, because then it's not work for them. It's fun.
Well, the best gambler I know is a guy, I won't mention his name, but he's right 75% of the time. And on any given weekend, he's betting maybe 3 or 4 games at the most. He doesn't chase every bet. And you shouldn't chase every trade either. Right. You should only be in the trades that you really feel you have an advantage on. Right. And even then, hey, you can get burned. So yeah, for sure. To be in everyone, then you're chasing the high, not the profit. So, then the nat gas thing, going down to $2, man, that's going to really, really put the hurt on a lot of companies, a lot of resource companies.
Well, there once before when no one thought. So that's a hard trade. People shouldn't generally put too much money in nat gas. It's a hard trade. It's called the widowmaker for a reason.
Yeah. And my friend in the oil patch says the problem is that every time they drill a new oil well and they're successful, which is most of the time, guess what comes up with the oil? Nat gas, whether they like it or not. Can't do anything.
There's other gases too. That's part of the reason.
Liquids, yeah. So
let me add one other thing. A lot of people use our work in not only just what to do, but how much to do. I'll give you an example. Let's say you have $500,000 and you're going to do this 10 shots of 50 grand, and you like crude. When we say November, buy it for 4 months. And you're sitting there going, I'm going to put 50 grand in some crude trade, however it is, the stock or USO, which I'm not like, but whatever. With us, you might want to put 70, because not only are you picking the category, but you pick the sizing as well. A lot of places use us as the overlay to their own research.
Yeah.
That's kind of when Charles at Goldman, he reported to head of global macro trading. So that was, they used him for all sorts of stuff there. So that's what we recommend people do who are not Goldman traders, obviously, but to think about this both in the short term and the longer term. We try and smuggle in the long-term information while we're giving out this shorter term stuff, so you get a sense. It's very important to take time to think. Go take a walk and think about markets. Just don't think about it while staring at a screen. Yeah. I'll end off with that.
Finally, hey, just one quick thing on copper, Dr. Copper, as they call it, because that is a bellwether of the international economy. You said continues on a sell signal, which was given at 311, and it's really hitting the skids now. Yeah, well, it's on a sell signal heading towards 290. That was the next target. We haven't covered it that often. I'm looking back. It was 290 was the target. I'm checking the old research. We haven't given a longer term. Copper fell in April to a 4-year low. We could still see 286 then, but we called the up move. I do not have a long term view on copper that I can comfortably say. Very important. People understand we write and say what we know. And when we don't write about it, we don't have anything to say. All right. Well, on that note, just tell us how we get that free 1-month subscription again, David. Charles Nenner Research, write in, say that David and Kerry were chatting, and they get a free look, and then someone will be in touch with them, talk about the different service options. Right. Yeah. You just go to that site, click the contact tab, and David will get it, and your subscription will be started. And don't forget, go over to financialsurvivalnetwork.com, sign up for our free newsletter. And while you're there, check out the site. We've got alternative financial info from dozens of sites around the globe, stuff you're not going to see on CNBC. I promise you that. It's just remarkable what our webmaster finds every day in his pursuits. I mean, that's his passion in life, and you just can't believe it. David, we will check in with you shortly.
Look forward. Keep in mind, we called this top at IBM. We had no idea why.
And here it is. And if I were IBM, I'd go buy back some more shares, right?
That's another question. I got to look into it.
All right, David.
Bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.